Hi, I'm Tanya Thomas, a graduate student at Western Carolina University. I wrote in Entrepreneurship 640, which is entrepreneurship feasibility analysis with Dr. Robert Long. I'm excited to present my subject matter expert on related issues with Greg Brown of Cardinal Finance and the Charlotte Area Fund. Greg is the fund administrator of Charlotte Angel Fund, a 150-person plus group making pre-seed and seed stage investments in Carolina-based technology companies. His early stage investing career spans 30 years and has included leadership roles in angel and venture capital funds. Greg is also the managing partner of Cardinal Finance, a consulting firm providing fractional CFO and other financial advisory services to founder-led businesses in a variety of industries. So, hi, Greg. Thanks for being here with us today.
Oh, you're welcome. Good to meet you, Tanya.
Nice to meet you as well. So, first off, why don't you tell us a bit more about yourself and Cardinal Finance?
Sure. So I'm an accountant by training, right? Started my career there. My career's been split kind of half on the investor side and half angel and venture capital investing, and the other half being CFO of either privately backed or early stage public companies. Right now I have these two things that I do. One is lead a group called Charlotte Angel Fund, which we'll talk about in some detail. And the other is I have a small consulting business called Cardinal Finance, which is me and a small handful of other people. A lot of what we do there is perform what's known as fractional CFO services, meaning function as the CFO of a company, but on a less than full-time basis. And so occasionally, but not often, those companies would be the type that might be eligible for angel or venture capital funding, but not usually. So our clients in Cardinal Finance are more traditional manufacturing, distribution, professional services businesses rather than technology-driven companies.
Okay. So, what is an angel fund or angel investing?
So I'll start with this. When you think of an angel investor, whether it's just as an individual or as a part of an organized group, you're really talking about people who are investing out of their own pocket. And so it's like their personal money, and almost no one's a full-time angel investor, right? So they have might be a physician, they might have their own business that they built or something else, right? But almost nobody's a full-time angel investor. I'll contrast that with, you hear people talk about venture capitalists. Those are they're people who are full-time venture capitalists. They're managing that money professional for a living, right? And they're managing other people's money typically. So they're managing and investing money on, that has come to them from pension funds, endowments, some from high net worth individuals. But the venture capitalist generally is investing somebody else's money, and the angel investor is investing their own capital. And that's a very big difference, right?
Yeah.
It's one thing to invest some money that, oh, I manage this pool of money and I'll invest some of it here. It's a little different to, reach into your personal bank account and to say, I'm going to put some money in this entrepreneur's business because I believe in them.
Wow. Yeah, that might get a little touchy and worrisome when you're taking out of your own pocket, I would imagine.
Yeah, what's a different, I'll say it can become a different set of criteria. People do angel investing for a lot of different reasons. Some of them, and profit motive may not be first on their list. They may So you might have somebody who, and maybe they're a successful business person and they they want to provide the opportunity for others that someone provided for them, right? Maybe 20 years ago, somebody provided them with the money to start their business,
Mhm,
and now they've been successful. And so they kind of want to do a pay it forward kind of thing.
mhm.
Now they want to make money on their angel investment. And I think they need to in order for the system to perpetuate. Um, but there's more emotion in it, right? And more, it could just be, I really have a passion for what that founder is doing. For the venture capitalists, it's all, there is nothing other than making money, right?
Right.
They're running a money management business. They don't get extra points for supporting nice people, right?
Mhm.
Not that
Right.
anyone wants to, but that just doesn't enter, you know, uh,
Their mind
well, I
strategically.
don't know. Other sort of softer things like, do I believe, is this is the mission of this business aligned with my personal values?
Mhm.
That will definitely enter into the thinking of an angel investor, not as much for a venture capitalist, right? It's not about um, you know, social benefit isn't as big in their decision process as it would be for an angel investor sometimes.
Well, you've given us some gems on that subject and the difference between angel investors and maybe a venture capitalist business. Can you tell us a bit about the vision of the Charlotte Angel Fund and how it was developed and how you fit into the landscape of everything?
Sure. So we started about 10 years ago. There were 10 in, approximately 10 individuals who'd been a part of another angel investing group. That group was sort of winding down. They wanted to continue the activity, but they needed somebody to put organization leadership around it. And so they were introduced to me by a mutual acquaintance, and that's sort of how Charlotte Angel Fund started. For me, I think having an identified, approachable, early stage investor is healthy generally for any city's economy, and specifically for kind of any city's startup ecosystem. Whether or not that founder gets money from Charlotte Angel Fund, that we exist and they can approach us, they can maybe get feedback on what they're doing, and um, have an easier path to finding an angel investor versus, it's harder to just, well, where do I find an individual who might invest in my business? The physicians aren't usually hanging out. They aren't usually putting, signs outside their office and say, by the way, I'm an angel investor. Come in and ask me for money, right? But as an angel fund, we're very direct about it. We're here, we're approachable, we're looking for companies that are seeking capital. I think that's important. Um, I think it's important. I, I I structured Charlotte Angel Fund in a way to be an easy first step for an individual who's thinking that they might want to be an angel investor, right? But because if you wake up one day and you decide, hey, I might like to do this, well, then the question is, well, how do I do it? Right?
Mhm.
How do I find the companies that might need funding? If I want to put, let's say I like this entrepreneur and I believe in their business and all of that, what should I receive in exchange? Like what percentage of the company should I own for $50,000? How should this be a loan? Should this be equity? How should it all be structured? There are just a lot of things that can be done incorrectly. And so I'm a big believer that having, you know, having your first steps be as an angel investor, be as a part of a group where you can, benefit from the collective wisdom of the group, right? And learn some things about how to structure the transaction, what a fair price is, all of that kind of thing, so that you have some foundational knowledge so that hey, 5 years from now, you want to go do a deal, go do something on your own outside the group, you'll have a better chance of success, both for you and the entrepreneur you invest in. And so it was important to me that the group be structured in a way that was accessible for an investor who's starting it the first time. And that's why the required minimum is very low, right? It's a $30,000 minimum investment in the fund. And then that money ends up getting spread across 15 or 20 companies. That's so you can get the experience for what's a relatively, it's certainly less costly than if you went out and just started investing in companies. You probably have to write $25,000 checks at a minimum. And so you might invest in 10 companies at $25,000 a piece as an individual. You might have $250,000 deployed before you figure out that you're doing it all wrong. And that's a very costly error, right?
Right.
And I think it's important that we do everything we can to avoid those things, because if that happens to somebody, if they make 10 investments, they all go and maybe they made the wrong 10 investments, they weren't evaluating them correctly, they weren't structured correctly. Well, that person's just going to stop, right? And so they're going to stop being an angel investor, and they're going to tell 10 other people they know that they should never do it, right? And so I think it's important that people have reasonable success, a good experience as an angel investor, in order for it to perpetuate. And it needs to perpetuate, right? It's not just about having capital available today, but it's having capital available for entrepreneurs 10 years from now.
Wow. I think that's great. So, does your company conduct feasibility analysis on startups, and what does your company look for before committing to invest?
We don't do any formal feasibility studies, right? We meet a founder, we invite them to come to present to our membership. Our membership generally expresses opinion about their kind of degree of enthusiasm about it. And if there's enough enthusiasm, we'll do due diligence, which means, spend 2 or 3 hours with the entrepreneur, maybe talk to a customer, to talk to a couple of other employees, and really try to understand the business. But it's not that's not a formal process. The economic reality is, so we're typically writing a check of maybe $100,000. Well, if we were, let's say, hiring some consultant to do feasibility studies, right? They'd be, I don't know, they'd want to charge us $5,000 each to do those or something like that. And, if we're deploying $100,000 at a time to go spend $5,000 for each thing that we're trying to evaluate on some sort of formal feasibility study, it's not a very cost-effective way for us to go about it. So we really rely upon the collective wisdom of our group. With 150 people in the group, there's always somebody who knows more about whatever the business is than I know, right? Always. And so we rely a lot on the experience of the members of the group to give us some of that insight.
Well, that makes sense. You have experts in different areas, and they're able to say, well, financially, this is sound, or maybe this doesn't make sense for us to, take on. So that's a good setup, how y'all have that structured.
Yeah.
So
for us.
What is the trade-off for the investment? I know you spoke about maybe paying it forward, and why different investors may do it, but in the end, usually what do y'all have built in? I think maybe even you mentioned like whether you're going to get some type of equity or something. How do all the investors, if it's 150 people, get their piece of the pie?
Well, so they're investors in a fund, right? You think about it like a mutual fund. They're more active than that, but so they put money into a pot. So that fund, Charlotte Angel Fund, invests in a company. We're typically receiving shares, meaning some percentage ownership in that company. So you might approach us and you have some sort of idea for some software for the dental industry. I don't know. And we might put $100,000 in your business for 2% ownership, right? Something like that. And we might agree on that that's a fair trade. So we have some ownership in your business so that someday, when you have a lot of success and you sell out, you probably sell your company to some other big software company. We get 2% of whatever that sale price is. So we're not in it to make loans and collect interest. We're really in it longer term, owning a percentage of the business. And the criteria are pretty steep. So the reality is that most of the things that we invest in aren't going to work out. So therefore, and that's just how startups are, right? It could be that the fundamental business premise was wrong. The individuals might not be adept at operating the business, right? They might just make execution errors. There are a lot of things that can go wrong. COVID can happen, and some certain businesses don't do well in certain situations. What that means is that the bar has to be high when the ones that make it have to make you a lot of return to make up for all the ones that lost, plus produce some profit for the fund. So every business that we look at, we're trying to determine whether in a case of a really positive scenario, could we make 10 times our money? If we put in 100,000, is there an outcome that could bring $1 million back to us? And that's not because we expect that to be the average, but if we're going to invest in 20 companies, one or two of them need to give us back 10 times our money for the overall math to work, because half of them are going to go bust, right?
Right.
If half of them are going to produce zero, well, if the other half only produced 2 times our money, then there was no profit. We just were breaking even, right? So we have to have some winners that do very, very well. So we're looking for things where, if it works, that the financial return to us could be very significant. That's why a local Italian restaurant wouldn't get investment from us. Not because it is that doesn't mean it's a bad business, but that we can't invest. It can't get to the scale where we could get 10 times our money, right? It just can't, because it's physically constrained by the brick and mortar of the building it's located in.
Right. So you have to take some risk with the companies that you select.
Yeah, and we're definitely taking risks. Like our members all know, for any one thing we invest in, the most likely outcome is zero. It's for any one company. So, and that's just the way it is. And yeah, that's just the way it is.
So, does your company, either one, because I dabbled a little bit on Cardinal Finance's website,
Mhm.
help entrepreneurs build up to the investment phase if they haven't made the mark yet? Or are you just not in the business of jumping in to their situation like that?
So we don't run anything formal like an accelerator program or anything that's really meant to nurture these companies prior to the point in time when they would meet the criteria for Charlotte Angel Fund to invest. We meet a lot of companies, and we try to be helpful by being clear about where they would need to get to in order for our group to look favorably on it, like what stage of development their business would have to get to, or for some to be able to say, in your industry, we would just never do that, right? Like if let's say you have a hair salon, we're never going to invest in a hair salon business because of that scalability. Like it can only get so big, right?
Right.
That doesn't mean it's a bad business, but groups like ours aren't who you should be looking to for funding for that. So we don't have any formal programs. We try and be helpful. I mean, so Cardinal Finance, most of the businesses that are our clients are typically more advanced. Like they usually have a minimum of, let's say, $3 to $5 million a year of revenue. So they're usually more advanced than the companies that Charlotte Angel Fund is considering to invest in.
How would you approach a successful business such as yours seeking an investment if you thought you had what it took and now you're ready to try to approach the company?
Yeah. So investors are always looking for deal flow, right? I'm like, we need companies. We need to be evaluating companies all the time. We need to find them somewhere. So we're very open to, if you just sent something to us via the contact us page on our website, you would get a response. Now that said, there are certain things that you can do to enhance your odds of success, right? Yes, you can just send something to the contact us page, but so what would make us more interested in something? If you, for example, let's say that you could pretty easily find out what other companies we've invested in, right? And because you're active in, let's say, the startup community in North Carolina, you might find that the founder of one of the businesses we've invested in. And if you were to say, hey, I see that Charlotte Angel Fund invested in your company, I would like to approach them about them possibly investing in my business. Would you be willing to provide an introduction for me? Instead of me just having to fill in some form on their website and hope they call us back. That would certainly enhance. We would look at that more closely than a random thing that comes to us, right? Just because, okay, somebody that is coming to us recommended or introduced by someone that we already have some degree of regard for, right?
Right.
But don't, like, if you don't have one of those things, right? Or it could even be a connection. Let's say you had a startup business. If you said you could ask one of your professors to send me a note and say, hey, I just want to bring, I want you to know I've got this student, Tanya, she's doing this thing, she's fabulous. Like I would highly recommend that you look at it. That, again, that's a little bit different than you just filling in a form on our website, right? And also shows some initiative on your part, which we would look upon favorably. But if all else fails, like I said, we do we do look at those things that just come into us cold via the website or any other method, or just let's say even approaching me or my partner Camille if we're at an event somewhere, right? There are various events in the startup world in North Carolina, and anyone who happens to see us there, just tap one of us on the shoulder. I promise you, every month we have a meeting every month of our members. Every month we have to find 3 companies that we feel good about putting in front of our members for them to evaluate. So every month we're trying to find companies. So we're always eager to meet someone new.
Okay. Well, you gave some great ideas on how to get the edge at kind of getting looked at and considered that maybe I wouldn't have thought about before. So it was interesting to hear those insights from you. So lastly, what advice would you give a class of aspiring entrepreneurs about pursuing their dreams in a world where they may be afraid because of they don't have the startup capital and how they're going to make their dreams come true? What advice would you give them and us?
Um, Couple of things. One, um, don't be afraid to fail, right? Most startups are going to fail. If you start a business and it fails, it doesn't mean that you are a failure as a person. And so don't don't let that deter you. Um, Second, I would say I think the easiest time in your life to take risks is early. And that's counterintuitive for some people think like, oh, well, later in my career, if I have some money saved up, whatever. So the reality is when you're coming out of, let's say when somebody's first coming out of college, well, they haven't really built up, um, their lifestyle needs are pretty minimal, right? They're living in an apartment with 3 or 4 other people and whatever, like they're subsisting on not a lot of money, right? But so that is, um, in my opinion, a relatively easy time, like a relatively comfortable time to try something, right? Your needs are minimal versus, let's say, instead of trying something on your own, you went to work at a bank, made a pretty good salary, you bought, you're driving a nice Lexus SUV, all that kind of stuff. Like now you've got a lifestyle that needs some money that's built up, right? Well, now to leave the bank and go say, I'm going to do this startup thing where I don't get a paycheck for 6 months. Well, I got bills, right? I can't do that. And kind of the last thing I would add is I would encourage anybody work in a startup before, like, go work for some other startup and get a feel for the experience before you go do your own, right? Understand what it's like. You may find out that being in a startup just isn't what you thought it was going to be. Um, so getting that experience, find a local startup that you can go to work for, make a little bit of money. You'll learn some things, like you'll see how they do some things. It'll give you a better chance for success when you do your own thing. And and there's a possibility you'll figure out, hey, this just isn't a good fit for me. And that's okay, right? Nobody has to do a startup. Um, so it's okay if you conclude that this just isn't the right thing for me, right? But I think having that experience working for an entrepreneur and seeing how they do things before you jump right into that yourself, I would encourage anyone to see if they can make that happen.
Okay. All right. Well, with that being said, if I would like to take the time to really thank you for taking time out of your busy day to interview with me for this project for my classmates. And I've just learned a lot about angel fund and people that are investing their money and what they are looking for um, when they're looking to add a company to their portfolio. So
Yeah.
again, thank you for being here with us today.
Oh, you're
Um,
welcome. It was my pleasure, Tanya.
thank you. Greg Brown, everyone.